Hello, everyone. We have a special speaker announcement for our 2024 Midwest Real Estate Investor Conference, which is being held this February 22nd through 23rd, right here in Grand Rapids, Michigan, at the DeVos Place Conference Center. This is a must-attend two-day event for real estate investors at all levels. And I have a very special speaker announcement to make today. Scott Meyers will be our featured speaker on self-storage investing, proven strategies for success. We are really looking forward to your presentation, Scott. Thanks so much for coming back again.
Well, thanks, Brian. I'm looking forward to coming back as well. Self-storage has just been on fire lately, and I can't wait to share what we've been doing and some of the strategies to win in the marketplace when we come back.
What has happened this past year in 2023, and what do you expect in 2024?
Every economic cycle is a little bit different, as you know, Brian, and this one is no different. We're seeing, although interest rates have gone up, they've doubled from the historic lows that we had back in 2020. However, the cap rates in self-storage have stayed down at around 5%, even though interest rates are at 8%. And that, once again, just stands for the resilience of the asset class. Self-storage continues to do very well during both good times and good economies because people buy more stuff and they need to store more stuff. But then even when the economy slows down, and as we head into a recession or a pandemic, self-storage does even better because people are downsizing and individuals, businesses are downsizing and they're putting things in storage. And so for that reason, we've seen an uptick in demand for self-storage, and therefore, from an investor standpoint, the cap rates have been low, occupancy is high, and yes, this self-storage freight train continues to keep rolling on down the tracks.
What kind of opportunities do you see in 2024?
So, we've been preparing for this for quite a while. We saw a number of our friendly competitors, folks in the marketplace back in 2008 and then 2009 with the fallout, pick up a lot of distressed self-storage facilities. And quite honestly, Brian, they weren't even really distressed storage facilities. They were distressed owners that fallen on bad times. They were investing in multifamily and single family and office buildings and the other asset classes that got hurt really bad during the recession. But the facilities, they just got wrapped up in a bankruptcy or a foreclosure along with the portfolio that these folks had. So we were able to pick up a number of self-storage facilities at the time that were still operating well, but they just, for whatever reason, the seller had to give them up or the bank had to get them off their books. And so we're starting to see that again. We're seeing that there are some challenges in the marketplace. Multifamily is really taking a hit right now. Assisted living is not doing as well. Medical, office buildings, hospitality, all struggling right now. But again, self-storage, the stats don't lie. It's not just me. It's not just bias. We love the asset class because it performs so well and it is doing so well. And so we're seeing that, once again, history repeats itself. There are partnerships that are being strained, interest rates being double from what they were. People can't refinance at the new valuations with the high interest rates. And so they're having to go to the bank and do some workouts with their self-storage loans. And then there's some other folks that just aren't making it. We've even seen opportunities in some development projects we've been developing for a number of years, or converting and buying individual dark big boxes like old retail locations, old Walmarts, Kmart's, grocery stores, you name it, and converting them into self-storage. And we're seeing some of those businesses are taking a hit as well. So all that means it spells opportunity out for us to be able to pick up some abandoned development projects where people couldn't make them pencil out. These other dark big boxes, and then just some folks that couldn't refinance because they didn't build enough value up in their facilities.
Great. So when you come to Grand Rapids in February, what do you expect to be talking about and sharing in your presentation?
Well, we don't pull any punches and we don't hold anything back. So we're going to be sharing our exact strategies and how we're attacking the marketplace in 2024, doing it live with case studies. And so, the three main food groups that I just mentioned, which are acquisitions, developments, and conversions, and then how we're putting these deals together and structuring them with today's cost of capital and the opportunities in the marketplace and the interest rates where they are. And we'll just show you our exact formula for success.
And then, Scott, what's your favorite hack or app?
The longer I've been around, Brian, I don't know that there's necessarily a hack or an app. There's no, once again, substitute for hard work and good, solid due diligence and good analysis. However, I think the old adage is to be optimistic and running in when everybody is running out is something that has served us very well, especially in this economy. So it isn't a hack. It isn't an app. It's the sum total of being prepared for the opportunities that present themselves in a marketplace, which is ripe for taking advantage of. And that is the time that we're in right now. So I'd say it's running in, recognizing opportunity, and then acting on it.
Fantastic. So Scott, you will be speaking Thursday, February 22nd at 4 p.m. You definitely don't want to miss Scott's presentation on self-storage investing. I'm really looking forward to seeing and hearing you speak at our 2024 Midwest Real Estate Investor Conference, which again is being held February 22nd through 23rd here in Grand Rapids, Michigan at the DeVos Place Conference Center. And you can go to www.midwestreiconference.com to buy tickets and find out more. Thanks so much, Scott, for joining us today.
Looking forward to it, Brian. Thanks so much.